Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And hello there, I'm Yatin Mota.
Well, Yatin, we have ended the May series below that 22,500 mark. In fact, we even took out the 22,450 mark at one point. Fifth day of sell-off, we have shed 500 points from life highs, right? In a matter of 5 sessions. Would you just, today's fall, would you call it an expiry-led phenomena, or would you say that it's the, election jitters that's at play right now?
I think, there are global cues which were equally bad. There are political cues because, usually we see in the election result week or probably a week into the election result, such volatility expected, especially when the Nifty, has the expiry today, plus the volatility index. India VIX is trading above 22, 24 for quite some time. And in general, the traders are approaching the markets with caution, given the fact that this is the third time, there is a probability of PM Modi coming back to power, wherein the market expectation of the brokerages that I was reading was around 290 to 310 seats. And any kind of variance in that range, higher or lower, could determine the direction of the market on Tuesday. Monday, obviously, the exit polls reaction could be seen, but yes, I think this is the election week and the expiry week impact which has been seen on the markets.
That's true, Yatin. Confluence of factors at play here, but of course, we have ended below that 22,500 mark. The experts I spoke to were talking about a range between 22,500 to 23,500. So we are now at the lower end of that range. So we'll have to see how far this sell-off extends. But talking about today's action, Yatin, Sensex shed somewhere around 600 points below that 74,000 mark now. Breadth was extremely poor. Broader end of the markets were down somewhere around 0.5%, 1.5% both on the Nifty mid and small cap indices. As I mentioned, the NSE advanced decline ratio was almost at 1:4, Yatin. So that's the kind of poor breadth that we are talking about for today. All of the sectors were in the red, barring the banking pack, which saw some bit of reprieve after sessions that stretch of sell-off. So the Nifty Bank Index managed to end in the green. The top 5 Nifty gainers out of 7 today were from the banking pack. Of course, a lot has to do with S&P's revised outlook on 6 of the banks from the banking sector. So that's also that also came at play, and we saw some of the banks doing well. In terms of gainers on the Nifty, we had the likes of Axis Bank, ICICI Bank, HDFC Bank, SBI. These was among the gainers on the Nifty. On the flip side, you had Tata Steel. Numbers were good, but of course, I think it's the sell-on news that was at play when it comes to Tata Steel. Tech Mahindra, Power Grid, Titan, Wipro were some of the other laggards. But Yatin, if you look at the broader end of the markets, quite a few movers, result reactions there, and a couple of block deals as well today.
Yes, not a couple of them. Dozens of block deals are reported in the market today. But let's focus on the stocks which were moving in trade. Imami, after a good quarterly number and commentary, stock moved 16%. Linde India, KNR Construction, Paytm, all of these stocks reacting to numbers as well as the MSCI rebalancing which is expected tomorrow. Stocks in focus, IRB Infra, K Fintech, GMR Infra. All of these stocks were in focus, especially IRB Infra and K Fin. Both of these stocks saw stake sales from promoters as well as private equity players. Both stocks fell nearly 8.5% in trade. GMR Infra, reacting to the numbers, fell 7%. Cummins India, weak management commentary versus expectations and one-off boosted their EBITDA margins. Post that management clarification, stock fell nearly 6% in trade. So overall, Nandita, a lot of block deals and result reactions that were seen in the market today.
That's correct. One of those stocks is on my list this afternoon, Yatin. Imami, that was the top Nifty 500 gainer today. Good set of numbers. Outlook from the management was also fairly buoyant, and the reaction was pretty much evident in the stock price as well. 16% higher for this stock in today's session, and with today's move, Yatin, let me point out that the stock has edged back into the green for the year. on a YTD basis. Now the stock is up somewhere around 5 to 6%, and that's because of today's up move of 16%. Shares hit a 2-year high after a good set of numbers. Volume-led profit growth was seen in the fourth quarter. Management is expecting all-round growth from core brands going forward, and hopes of rural recovery is something that will drive FY25 earnings for this company. Of course, today there was the onset of monsoon, southwest monsoon in Kerala, right? And that's a day in advance, and most of the rural focused companies have already said that above normal monsoon will bode well for volumes and rural recovery, which by the way we've been speaking of for quite some time, but that wasn't taking place. But now things are changing. IMD has forecasted above normal monsoon for this year, and that bodes well, and signs of rural recovery is evident, and the management has also said that it targets double-digit growth in FY25 revenues. Rural recovery has kicked in already, and the growth was approximately at 6% in Q4 according to Imami management. Two of the brands that are not doing all that well will pick up. Kesh King and Male Grooming will return to growth in the current fiscal rather, and management has also said that summer products will lead substantial growth in this season. Of course, we have seen temperatures soaring and Delhi hitting that 52-degree mark. Yatin, of course, temperatures are soaring, and scorching summer will bode well for some of these companies that are focused on summer products, right? So pricing wise, it only expects 2 to 3% kind of growth in FY25. So the growth will largely be led by volumes, and a lot of these brokerages have buy rating on the stock. Yatin Nuvama buy rating target price of 645, 23% upside. In fact, Motilal Oswal I think had the target price of 600, which the stock crossed in today's session itself. Elara Securities has upgraded the stock from accumulate to buy, and most of these brokerages have a target price of above 600 rupees on the stock. Stock, of course, as I said, 16% higher, and looks like things are turning for FMCG stocks, in particular those stocks that are rural focused. Yatin.
Absolutely, and the good monsoon probably will augur well for all of these FMCG companies, and Imami clearly the stock of the day. Yesterday didn't react to the numbers which came on the fag end, but I think a lot of people were impressed with the management commentary which came in. But the stock in focus on my list is Alkem Laboratories. Obviously, Imami reacted positively to the management commentary, and Alkem reacting negatively to the management commentary. One of the top F&O losers. Alkem saw a degrowth in their India formulations business in the fourth quarter of this financial year, which is FY24. And when it comes to the outlook, they believe that merger and acquisitions will drive the overall momentum from here on. However, they see only a 5% growth in their US generics business. Now, I think the market really did not like the India business, which reported a decline of 2% year on year, and probably reacting to those numbers, shares of Alkem fell in trade. And overall, I think, Nandita, unlike the larger, pharma players which have guided stronger growth for FY25, Alkem clearly stands as a disappointing, number in terms of the outlook as well as the quarter.
That's correct, Yatin. Guidance disappointment and clearly reflecting in the stock price as well. But another stock that was in focus, Yatin, was Edelweiss, right?
Yeah.
RBI action there, and
yes,
that has impacted the stock price today. Take us through what the development was.
So, Nandita, we have seen the RBI action on a lot of NBFC names, and now the new name is Edelweiss.
Yeah.
Two major issues found in the subsidiaries. First is ECL Finance, and number two is Edelweiss ARC. Now, the RBI has, clearly said that ECL Finance will be barred from undertaking any structured exposures. The ARC business is also barred from doing any acquisitions of stressed assets till further notification. According to RBI, the audits that they carried out at Edelweiss, it had some lapses. In spite of RBI's, communication to Edelweiss to strengthen the internal controls, the management did try to circumvent the entire regulation and try to, probably evergreen certain, loans, probably because of which RBI went one step further to take, a regulatory action, which according to the market analyst is not good, because probably that will impact business and call for further scrutiny when it comes to the books of ECL Finance and Edelweiss ARC, which are major subsidiaries or arms of Edelweiss. Probably reacting to the news, we had shares of Edelweiss which dipped nearly 13-14% in intraday trade, settling close to 10%, 11% down on your screen, 12% down at 68 rupees. So clearly this RBI action indeed is quite serious for earnings as well as the overall outlook for Edelweiss Financial.
Yes, and we have to see whether or not there are more NBFCs that come under RBI's scrutiny or not, because we have seen a whole host of them facing the RBI wrath, so to say, when it comes to following guidelines. But of course, with that, I think we've come to the end of this edition of Closing Bell. Yatin, tomorrow is another day. We'll have to see whether or not we manage to make some bit of a comeback, whether we start the June series on a positive note or not. But a lot is riding on June 4th, and that's why traders are cautious. But from Yatin and me, thanks a lot for watching this show. Of course, for all your other news and updates, stay tuned to Moneycontrol. Have a great evening and come back and join in tomorrow morning on Opening Bell as well. Thanks a lot for tuning in.